Sir, your loan is approved, but one insurance policy is compulsory. The most expensive sentence. Picture this. You're sitting anxiously at a bank manager's desk. The air conditioning is just a little too cold. You're nervously tapping your foot, waiting for a loan approval. Maybe this is for your dream home, maybe it's to expand your small business, or, maybe it's for a medical emergency. You're in a vulnerable position. You really need this capital, and you need this institution to say yes. The tension in that room is absolutely palpable. And then, the agent leans forward, looks you right in the eye, and delivers a sentence that is literally going to cost you.
Sir, this policy is compulsory. Thousands of Indians have heard this exact sentence inside a bank branch. It's delivered not as a friendly suggestion, but as an absolute non-negotiable fact. Basically, a wall you cannot climb over without opening your wallet. But we really have to ask the most important question here. Was it actually compulsory? Or is that just what they want you to believe in that high-pressure moment?
Imagine the immense relief that washes over you when you finally hear your loan is approved. With the condition, right beneath the good news, hidden in the mountain of paperwork, is a little checkbox next to insurance policy, stamped compulsory. It's the ultimate bait-and-switch feeling. You finally get the green light, but it comes chained to an expensive product you never asked for, never budgeted for, and honestly probably don't even understand at that exact moment. The sheer joy of getting approved is completely hijacked by this sudden, heavy obligation.
Helpful protection versus forced obligations. Look, sometimes insurance is genuinely useful. It protects families, it protects your long-term goals. If something tragic happens, a solid policy ensures your loved ones aren't left carrying the burden of your debt. That is helpful protection. But sometimes, people bought policies simply because they felt they had absolutely no choice, and being forced to buy it just to get a loan completely strips away the value of that protection. It stops being a safety net and turns into a toll booth, a forced obligation draining your resources right when you need them the most.
Proving it later was almost impossible. And right here is where the trap truly snaps shut. Let's say you agree. You feel cornered, you really need the money, so you just check the box and sign the paperwork. Fast forward a few months, and you're paying premiums you can't afford for a policy you don't need. But if you try to complain later that you were forced into it, good luck. Proving that is incredibly difficult. Why? Well, because your signature alone becomes the entire story. On paper, you weren't coerced. You look like a willing buyer. The burden of proof was entirely on you.
How RBI rules are changing the game. Now, thankfully, the landscape is shifting. The Reserve Bank of India's conduct rules are fundamentally changing the game for borrowers. The regulator recognized this massive loophole where consumers were just being taken advantage of, and they stepped in. They've established rules of conduct that actively protect borrowers from these exact high-pressure traps. So it's no longer just about what you signed, it's about exactly how that product was sold to you in the first place.
RBI protections. Suitability is mandatory, consent is essential, and transparency is your right. Banks now have to actively prove that the product they recommended actually matches your age, your income, and your real financial needs. They can't just push a high-risk, expensive policy onto a retiree who simply wanted a small personal loan. Consent is absolutely essential now, meaning clear, uncoerced agreement. And transparency, that is your right. You have the absolute right to know exactly what you are buying, what it costs, and most importantly, whether it's actually a legal condition for getting your loan.
Your signature is not the whole story. This is a massive shift in accountability. One sneaky checkbox cannot secretly approve multiple financial products anymore. Banks are now forced to maintain a real standard of fair practice, and if an agent sells wrongly, if they use deceptive tactics to force a policy on you, the bank cannot simply wash its hands and say, hey, not our responsibility. They are on the hook for the conduct happening under their roof.
Ask this one single question. So, what do you do in practice? Next time you're sitting across from that agent and they hit you with, "Sir, policy limit compulsory high for loan approval," how do you fight back without losing your loan? Listen, you don't need to be a lawyer. You don't need to get into a huge aggressive argument. You just need to be prepared with a very specific, strategic response. You just need to ask one single question.
Please show me the official rule where it says mandatory. Burn this into your memory. That is it. Deliver it calmly, professionally, and firmly. This one question can protect your money and acts as an absolute shield against high-pressure upsells. If it truly is a regulatory requirement, they'll produce the document. But, spoiler alert, 99% of the time they won't be able to because the rule just doesn't exist. The moment you ask this, the pressure tactics usually evaporate instantly.
Financial products should solve your problems, not create new ones. This is a brilliant guiding principle from Ravi Prakash at Fortune Profit Consultancy Services. Think about how profound that is. You are taking out a loan to solve a problem, right? To buy a house or fund an education. If getting that loan forces you into a complex, expensive insurance product that completely drains your budget, well, that product has just created a brand new problem for you. Always evaluate an offer through this lens.
Don't sign, ask, verify, decide. Remember this simple 4-step process to take back control. Don't sign under pressure. When they drop a surprise, compulsory product on you, just pause. Ask to see the official rule. Verify that the product actually matches your needs, your income, and your age, and only then you decide. You are in the driver's seat here.
Have you ever paid for a compulsory policy that wasn't actually required? As we wrap up this explainer, really think back on your own experiences. It happens to the absolute best of us, but now you have the tools to ensure it never happens again. Empower your financial future by remembering that you have a voice at that desk. Follow for practical money lessons, and until next time, always ask to see the rules.